All right, everybody, this party started here. My coffee and the light. All right, good morning, everybody out there. How's it going? What's everybody doing? We're getting a few coming into the stream here. Good morning, everybody. So, as usual this morning, I've Brandon, Crypto Trades and Tech here. I've got a special guest today, Michael, Fair Free Digital. You guys will know Michael, I'm sure, creator of the Bitcoin PiBlockTop and Bitcoin by Blocks work paper. So everybody knows, of course, neither Michael or I are licensed financial advisors. So if you were to take any trades based blindly on anything that you hear us talk about here today, you're going to end up losing all of your money and living in a van by the river. Now, with that said, let me see here if I can kill my screen sharing and say hi. Good morning, Michael. How are you doing this wonderful morning?
Hey, man. And hello, everyone on the stream. Thanks for coming on.
Nice sweater. I see you got the ugly sweater out.
Star Wars.
Star Wars theme. Oh,
shirt.
very
That's
good.
great.
I always keep it professional here, my collared shirt, but that is awesome. I should have wore you should have told me I could have wore a Star Wars shirt. So you guys will notice something in my background here. Instead of my usual seeing my room, before we went live, I just had some random backgrounds up that Michael noticed and commented on. And I said, well, I'll tell you what, I just took a new position in ADA yesterday. So I'm going to throw up the the Cardano roadmap behind me here. So we'll look at some ADA trades. I know people have been asking me, and it's finally time, people. Finally, you got to be patient. That's the thing about the markets. You have to be very patient and wait for the right time to strike, and it's finally time. So now, of course, it could be not time, and I'd have to get back out. But that's neither here nor there. All right, let me share my screen. I'm going to open up here just with some general thoughts about where we're at in the market and what I see going on, and then I'm going to hand it over to Michael. He's got a few slides for us, updates on a few things. So let me flip to my screen share here. All right. So as you guys know, I got to move this around a little bit because I've got this guest. Okay. So I just said I took a Cardano trade. So if you look here, I'm going to show you what I was looking at on Cardano and what I did. Okay. So obviously Cardano's been just since the $3.10 tippy top early September, when right before Goguen launched. Goguen launched over here, and like right when not Goguen, Alonzo hard fork smart contract. I guess technically it would be Goguen on the map. That's right. Anyway, the Alonzo hard fork and smart contracts went live, and then it just sold off like crazy. There was a lot of FUD in the market. If you guys remember, oh, the smart contracts don't work, DEXs don't work, blah 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 blah. It was 90% FUD. There was some truth to because of it working differently. But we've been in just a terrible sell-off ever since then, and people have been asking me when am I going to take trades on it. Well, all through here, I didn't take any trades on it, even though it looked like it was bottoming, because we were watching closely what Bitcoin was going to do. And you can see here we've made another leg down, and finally here we've decided to put it in bottom. Now, what I saw on the chart here, obviously, I'm just going to, like I said, I've had some people ask me so long for this. Let me just recap here. Okay, so in trading, a lot of times we draw these very specific, you see these lines I have here, my support and resistance lines, right? You can draw a specific line to give you a point of reference, but rarely does the market ever to the absolute, dollar or penny or pip or whatever go to that point. And it normally is confined to a range, right? So normally it's a trading range when orders start to flow in at a certain price, and when price gets below a certain level, orders start to come in. There's usually not limit orders sitting on the books that just keep a certain level. Sometimes there is, But normally it's orders come in, people take action, they learn about the price being down, whatever, right? Trading desks get active, all that stuff. So this price range here is super interesting to me when we got back to this price range. This is where, if you recall earlier this year, this is what we made it up into for the Mary's hard fork. That was kind of the precursor to this hard fork here. And this was alt season 1 over here, this big pop, and then the Alonzo hard fork. So what I'm seeing on this is I'm seeing it come back to this area of supply here. So the market quickly pushed a price up into this area, came back above, well above it, once for alt season 1, twice for Alonzo hard fork, but right back down to it. So this entire area was of interest to me. The specific level I was watching was a $1.18 weekly level. Now, I couldn't blindly buy $1.18 weekly level. I guess you could have here. I probably should have taken a stab at it right there, because we came just about to it and then touched it again and we're off, and I could have put a stop loss right underneath it. But in this case, I waited, and I waited for the breakout of this downtrend structure. And now what I'm looking at here is we've broken this downtrend structure. So what I did is I waited until we got some 4-hour closes above. These are daily Heath level resistances. You see this candle right here? That candle right there, when it closed 4 hours above that, I set my limit order to buy at the next Heath level below for a fake out to the downside, a test of this. So it just closed above that. So this is a signal that the market wants to actually go above that. But it's probably going to retest the prior support level, which is these two wicks wicked right up to that Heath level. This is a daily. If I put it on the daily chart, you'll see. This is where the daily price action turned around. Let me put it right there. Move it a little bit. 131 was the price, right? So there's a daily Heath level. I don't have my magnet tool on, sorry. So that's where I put my order, 131. And that was one heck of a bounce off of there, but we got a bounce off of there so far. Now I can put my stop loss underneath there. I'm seeing a lot of people turn bears. I think Michael's going to talk about this. We talked about this a little bit beforehand. I'm seeing a lot of people, and good morning, by the way, everybody joining, Edward, Devin, and KK237. I don't know who that is exactly. But so there's a couple of, obviously a couple paths that Bitcoin could take from where it's at right now. You see it consolidating here. And you see there's some obvious parallels in my opinion to like the late September price action. And we could very well be currently right here, more or less. It's taking a while. It's taking longer than that to consolidate so far. We could also be right here, right? We don't know if we're in this same pattern and we're going to break down further and fully test the low of this wick, or if we leave that wick untested like we did in September. We don't know. We won't know until price confirms one way or the other. But so far right now, 48,885, the daily Heath level there, is acting as resistance. That's also this trend line, but we're above this other trend line. Now, what's encouraging about this to me is this is taking longer. Like this price action over here to the left in the summertime, it did something similar, but this is taking a little bit longer to play out and it's moving a lot less. So we'll see if we get continuation to the downside or if we get this September style price action and break to the upside. We're going to find out here very, very soon. Obviously, both of those are in play. Technically speaking, we're still very sideways. One other small thing I want to point out, I'll put out let me point this out and then I'm going to hand it over to Michael because I want you guys to hear from Michael more than me. But this is our sell-off low. So far we've put in a little bit of a higher low from that sell-off, but you see this trend of lower highs. We broke that trend of lower highs here. There's another one here. We broke that trend of lower highs here. Now, of course, this could be a fake out, and we can go back to the downside. But what we're looking for now is a higher low in theory. So we could come back to 47.2 or something, and then bounce off of there. But we're looking for a break of this trend line for some structure to some price to hold as support. And then off we might go. Now, I've had several people ask me, why did I enter Litecoin ahead of Cardano? I'm going to show you one other small thing. What I'm looking at when I take alt trades of any type, whether other than USD pair or the Bitcoin pair, they need to be appreciating versus Bitcoin, or I might as well just be in a leveraged Bitcoin trade, right? So Litecoin, this pattern, it put in a bottom here, put in a little bit of a higher low, and you had this kind of these automatic reaction, and then a dead cat bounce high, and then these highs here. This high took out those highs, and so I've been more aggressive as Litecoin took out this trend line, made a higher low and a higher high here in this very local short-term time frame. This was the first one to put in this pattern. Now, I know the people were looking at DOT. If I go to DOT BTC, DOT hasn't made that pattern yet. It hasn't really confirmed that pattern. It's actually just been down versus Bitcoin. And so I'm waiting for it to confirm a bottom. And the same thing was true of Cardano. Like I was waiting for Cardano to confirm a bottom. And until we put in a little bit higher high than this wick right here, I didn't have much to work with. Now that we put in a little bit higher high, it came in slightly higher, then I had something to start working with there. Right. This is super early. But what I always say all the time is you don't want to try to guess when the trend's going to change. You have to just wait for the very first sign. You want to be early on the trend reversal, but you don't want to be too early. And so that's where we're at. So I'm currently in positions on, I've been in a Litecoin position for a while, positions on Litecoin, Bitcoin, and Cardano. So that's just an update for me. What I see going on in the markets, we'll see which direction Bitcoin decides to ultimately break here. But I think, you can see the setup in play, and we'll see if we break to the upside. We're also, there's a trend line. If you draw this trend line from that touch to that touch right there on down, you can see that we're basically hovering on that trend line right now. And of course, you can draw that trend line. A lot of people are drawing it like this, with this price action over here. But if you take those two outer touches, right, and you can see that we're kind of following that down. So we're very much consolidating in this little bit of area right there. And so that's going to give us our signal one way or the other when you break price to one side or the other as to what's going to happen next. All right, Michael, it is time for you to shine, my friend.
Yeah, I mean, I don't know how much you've been on Twitter. I mean, it's been pretty quiet, which usually means big people are buying, little people are like small holders are bearish or, just not even interested, right? We had that 4% price pump or something, and I didn't see anything. So,
Right.
and I mean, this happened last year too. In the August timeframe, there was a lot of fear and uncertainty that we were going back down to 8K, back down to 3K. But we ended up, and BTC was bleeding. If you look at it as compared to other assets, people think that crypto is like the higher beater as compared to the stock market, and that's true. It is, but it also follows the directionality of the stock market. So it does lag before it really starts to get going, and then it goes faster than the markets, which on the upside. On the downside, we actually see crypto a lot of times leading the stock market down. Just what I've noticed. I put together as well a few slides just to kind of circle back to where we were last time. I'm going to go ahead and share my screen and just see where we are now. Let me know if you can see that, right?
I can. Thank you.
All right.
Look at that, the name and everything. All fancy.
I know. Yep.
I'm actually working on I'm taking notes for a Twitter post as soon as we get off going live based on some of your comments, or just letting you know. So I'm going to plagiarize and give you some credit for some things. All right, go ahead.
That's cool. Yeah, so as Brandon said, if you want your 1.5% year yield on a US government treasury, there are plenty of professional financial advisors. We are not professionals. We're simply two individuals talking about things that are interesting to us in the markets and then what we are doing about that. Okay, so the other thing about this slide deck is I thought we were going to be going live on Sunday. The slide deck's really not that out of date since then. We're at Thursday. But we're trading higher than 47,000. We're at what, 48,000?
48.5.
Yep. So this is the market cap chart of Bitcoin. I really like looking at the market cap. I think that it gives a cleaner view than the price action alone, just because this is what large institutional players use when they are, trading stocks, bonds, or commodities such as Bitcoin. So we're consolidating. We're a little bit higher now. Obviously, we're around the, let's see, we are at the $9.1 trillion level. So, we've got a nice channel going on here. and we've kind of just been consolidating down and cool. I mean, like if you really look at the price action from last March, this is like one big cool off from a very substantial move down from about 4K. So nothing concerning there for me. This is the Bitcoin NASDAQ chart. I really like this chart because it is Bitcoin, which I see as the speculative and future, personally, I believe future store of value, de facto store of value, versus the NASDAQ, which is the current store of value as I see it today. We actually broke up above this line right here. We broke above it. We're currently just under it. I took a trade here, and it was funny because I took a trade here. We came back down under the line, made like a very marginally lower low, which I can show you. I guess I'm sharing the PowerPoint, so give me 1 second to stop my screen share real quick and reshare my screen with just what I'm looking at on my whole screen. Okay, yep, so on the 8-hour chart, we actually came above. My trade triggered overnight as we broke this line. And then again, overnight, as we made this marginally lower low, I was stopped out and took profit at the same time because the NASDAQ has been going up and Bitcoin is still lagging behind. So I'm waiting patiently to take another long off of this. But you know, that's trading. Be patient, wait for your opportunity. Cool. This is the Fed's balance sheet. As everybody on here knows, last time I'm very into watching what the central banks are doing. There's a lot of narrative going on that the Fed is tapering. However, they are not tapering at all. Their balance sheet is still expanding at an exponential rate on an exponential graph. And until that changes, I think it's very important to understand that central banks are right now an extension of government entities. They are as trustworthy as the government entities that have severe influence over them, and their goal is to bring debt to GDP down. In order to do that, they have to get the markets to believe that where they should be is in bonds, and then they have the ability to continue printing. If they can't convince market participants to buy bonds, and the central bank is the only one buying bonds, it's not going to work because we'll have hyperinflation and all of that and a lot of political backlash. So what we're seeing right now, I believe, is narrative and perception management over inflation, right? So when the Federal Reserve talks about inflation, they said what their main concern is that the perception of inflation will become persistent and problematic, right? So as long as the perception of inflation can be managed, they can keep printing, and they will keep printing, which means asset prices will go higher. This is just the fear and greed, I believe, right? I mean, we've had almost a whole month now of fear or extreme fear. So it's been a great time, in my opinion, to continue to buy in a dollar cost average format if you're not specifically a trader, but we have a lot of traders here. So let's continue through the chart. We have a lot of illiquid accumulation continuing, right? So I think people underestimate how illiquid this supply is. I mean, even in our March sell-off, you know, we sold about 1,000 or so, sorry, 200,000 or so coins. But I mean, most of, and as you can see, that was with the goal of accumulating more coins, right? Most of these coins, as long as the fiat system exists and there is such a thing as borrowing liquidity against collateral that is constantly going up, there's no reason to ever sell your collateral, right? So most of these coins are not coming back onto the market. And we can see for the first time ever, for the first time since, you know, we really made really big moves in 2017, the illiquid supply is, and sorry, the liquid and highly liquid supply is just getting crushed at the moment. This is just another chart showing illiquid supply, just really hammering home that these coins are getting sucked up off the market. And while there are still plenty of coins to be bought, the understanding that coins are coming off the market and never coming back on is something that will start to get priced in and force the price much higher.
Can I interject here real fast with a thought,
Sure.
Michael? You guys know that I've been pretty much an advocate for, I think this manipulation of rolling tops and so forth and so on is more likely to continue than not. I will tell you, I am seeing everything building that's needed to be built for a blow off top. So I'm not saying it's going to happen. I still do think, because of the nature of market participants, that when we start to get that really strong price appreciation, we'll end up stunting it before it goes just truly vertical and then crashing back down. It'll end up probably in like a 3 drives type pattern, in my opinion, still. But I can see it being far more parabolic than I could have just 3 months ago, because of how things, ever since the summer sell off, everything that's happened since then, all the moves in the market it's been building this insane base to blast off from. I mean, that's just what I'm seeing.
Yeah, I mean, like, the people who are part of illiquid supply are mostly the large holders who don't need to sell, right? We're seeing this divergence between, as a lot of the government assistance wears off, people who have to sell being put in a position where they thought they maybe could sell Bitcoin at 100K instead of selling at a 60% discount to that, around 40, whatever, 42K, 41K, 48K, right? Whatever. They are selling to large holders that do not have to sell and have every intention of, they understand markets, and they understand the premise of having a digital fixed supply token that allows them to borrow against collateral at 0% interest rate, because we're nowhere close to the rising of interest rates, in my opinion. They can't even stop printing. So BTC, this is the can't see the title, but this is the 7-day moving average of coins on exchange, I believe.
We can see the title.
Okay, cool. That's coins on exchange, right?
Mm-hmm.
Yeah, so we're just seeing coins on exchange get absolutely crushed. And I'm not seeing the growth on the Ethereum side that really would suggest that these coins are being sold on decentralized exchanges at the moment, right? It doesn't mean that it won't return, but it looks like people are just shoving these into cold storage and keeping them there, not like wrapping them in Ethereum, like wrap Bitcoin or something like that. This is the chart that I had from last week. We've now actually come into this line. I'll go ahead and flip over to that. So this is where we are at currently. And actually, when we hit this line, this is where we've started to actually turn up. So I personally, the work I've done in this space with how the cycles work, how this peak here really wrapped around this top, and how this peak here has wrapped around this top, both times, by the way, making an all-time new high before retracing back down. I mean, you can see it's wrapped around, and now we're kind of resuming up here. Very excited for what comes next, and we'll see if this kind of plays out. This is exactly what I was saying before, and where we are now, and then kind of what comes next, right? So as it kind of diverges away from this being a bear market, right? I think part of the reason people think we're in a bear market is they're looking at the previous cycle, which is exactly what you would have been doing here, looking at the previous cycle, and price turns around and just goes completely the other way in the opposite direction of the vast majority of market participants. So that's kind of what I'm looking for.
Yeah.
It all seems to make sense from a market psychology and a block-based time frame of lengthening bull cycles and shortening bear cycles. So
unfortunately, two people who are looking at the time from having on the Gregorian calendar, this is two times that they're going to get, it's going to hurt them twice. They're having the expectation of a December top, which obviously crushed a lot of people's hopes, and a lot of people probably are out of the market. I noticed my Twitter, people commenting on Twitter posts and YouTube videos. It's all down because so many people have left the market that were really into the space that think it's over. And
yeah.
and then this is a problem with building certain models and having certain expectations about things, and especially this Gregorian based 4 year cycle theory. It's really going to crush a lot of people. Unfortunately, it seems like because they
Yeah.
waited and waited and waited all year. Maybe bought in springtime, waited all year, got out break even or a little bit, maybe a small loss here in December when things didn't work out their way, and they're out of the market. Hopefully enjoying some time with family or whatever. But here pretty soon, I think they're going to look at their phones and go, "What?"
Yeah. Yeah. And I mean, people are going to be off on Christmas and telling people how they're not buying Bitcoin. And then the next thing you know, price is going the other way. And that's just how it seems to work. It's fine. We're trying to stay ahead of where the market is going and what's next, not necessarily following the market participation. Cool. So just a review of the Pi cycle top or Pi block top, sorry. You got me saying Pi cycle top now. That is the idea that we have lengthening cycles when you measure them in terms of blocks. We only have 2 points right now, right? Like a diminishing return idea is possible, but not currently my base case. And this purple line here is what price would have to do in order for the Pi cycle top indicator, which has concluded every single bull market, if you want to call it, right? Like I even see stuff here where people have been talking about this has been a bear market, right? And if people believe this is a bear market and they get price going up the same way price went up here, they're going to be saying, oh yeah, we might have another little mini bear market and, no big deal, price is going to go up forever, right? When in fact, this will be, if price does come up here, this will be the top where we have a very sharp 85% drawdown. That's faster than the prior cycle. I'd have to look at by how many blocks, but I think it's shorter by about, I don't know. I'd have to come back with that. But yeah, it's going to be a pretty nasty bear market if it is following this block-based cycle. Another thing just to note is that if you just kind of look at the cycle, this last cycle and this current cycle, right, we had some pretty extreme actions by the Federal Reserve, right, which led to them then basically trying to do nothing more. I wouldn't be surprised if the Federal Reserve has to turn around on monetary policy, just based on what I'm seeing from the government balance sheet and the fact that they just passed another deficit ceiling, which was a rise of $2.5 trillion, and they expect that to last them 12 months. So, yeah. So who's going to buy those bonds is the question. Do you want to say something, Brandon?
No, I'm over shaking my head, going, I didn't know about that. That's insane.
Yeah. So they just passed it. I think it was the 17th.
Mm-hmm.
Yeah, something like that. Just a couple days ago. Yeah, 2.5 trillion, and they expect that to last 1 year. This is just the zoom in of the Pi block top. As you can see, we're coming into this line now. So here we go. Hope's not a strategy. A lot of work went into this. So we'll see. It'll be interesting to see if we get no diminishing returns with full cycle, which is my base case, or if we get a diminishing returns and then we have a logarithmic regression that we can start to follow for the next bear market and the next bull market.
All right, I am gonna. Oh, never mind. I got background noise. Maybe I can hear my dogs.
Oh, I actually can't hear your dog. But anyways, again, zooming out, this chart looks awesome. No big deal. I I don't see anything, any indication of bearishness. In fact, what I see when I look at this chart is I see price squeezing in an upward direction. And what we can see here is a massive upward squeeze of price directionality that a lot of times is followed with very bullish moves. Very rarely do you get price moving in kind of a consolidation form like this, where price then breaks to the downside super sharply. A lot of times you actually get the opposite. You get price squeezing down and then price finally drops down. So what I'm seeing looks really good from the chart I'm looking at. Just something I noticed.
Yeah, that comment I had. So you made the comment, hope is not a strategy. Very good, right? And what's really great about your analysis is that we have your analysis to fall back on as a kind of a macro view to help kind of color our bias about things. But at the same time, on-chain continues to line up more and more and more so to kind of your case about this early 2022 very large, even parabolic top. I'm even going to have to concede that I now see all the scenarios in place for a more of a parabolic looking top. But secondly, technicals. This is the great thing about this is where when we say hope is not a strategy, that's in trading and investing is both true. But we have some technical analysis abilities to fall back on as well. And the technicals, even on a lower time frame, they're looking good. They're looking more in your direction. And you continue to see, I know people have gotten this extreme fear, but I mean, if you just go back to just a simple chart, and just everybody on your chart right now, go draw a little line underneath the price of Bitcoin on July, at the end of July, and then draw a line under the price of Bitcoin at the end of September, and then draw a line under the price of Bitcoin at the end of November. It's going up every time. It's a higher low, and we're putting from the summer sell-off. We've put in higher lows and higher highs. Like this is bullish price action. Like, so people being in extreme fear, and it's bananas to me that people are in extreme fear, and this is a bullish chart.
Yeah.
But anyway, go ahead.
Yeah. So
the charts
again,
line up. Charts on chain and your work are all lining up very well.
Yep, I agree. And so this is just that chart from last time that we showed of Bitcoin in terms of the central bank balance sheets all combined. And I'm starting to, and I'll put more charts out on this in both the Discord and on Twitter, but kind of what I'm looking for areas of leverage trading, right? So if we hit this line, I'll be probably taking profit and, waiting for the pullback. But I expect the price action going into next year, especially with a lot of what I've kind of been looking for of central planners starting to try to come after the velocity of money with more lockdowns or restrictions or whatever. You're seeing it in Europe right now. And I think that it's likely that there will be many states in the US that kind of do the same thing, unfortunately. But if they can slow the velocity of money, it means that they can print more, which means that they can, pump this chart up. So here's the other thing that I was looking at that I was kind of playing around but didn't bring on the show last time. So what I've done is in terms of the central bank balance sheet for looking for where the next potential top could be, I've basically looked at SID extension from cycle to cycle peak, or from cycle peak to cycle peak. And you can see that while we are having diminishing returns, even in terms of the central bank balance sheet expansion, which is really just equivalent to real purchasing power. So I'm looking somewhere in this 4.236 to 6.854. Again, we only have 2 points, so we don't know how diminishing things will be yet, but I almost certainly will have this as my first major exit and then my second major exit, potentially even, more than half of my Bitcoin stack if we got that high. I don't know if we will, just because you can see here we kind of dropped down 2 levels. So two levels drop down would be this 4.236 level. Can you see that? Is that clear, Brandon?
Yeah, it's fairly clear. Yeah, I think we get that. So yeah, you had. So the other question would be, what's the dollar price on that fib level?
I know I need to. So that's a great question. I'm still working on that. It's very difficult to take global central bank liquidity and then convert that back into a dollar amount. The best I've kind of been trying to do is work by percentage how much of a game this is. And then I'm writing some code to kind of take the central bank balance sheet and then use that to convert that back into a nominal number, but that's not done yet. But if you take all the central bank balance sheets and combine them and then put the Bitcoin price on there, I mean, the nominal number to me is less important because you could always just reference the chart at the time and kind of get an idea. The reason that I have this 6.854 level circled is that because I would think as Bitcoin starts to compete as money and for money, you would actually see these returns, the amount that the returns are diminishing start to decrease, and then actually start to see increase again, kind of like a sine wave chart, right? Like you'd kind of start to see the central banks fall apart. So we'll see if that happens. They seem to have a pretty good grasp of the situation at the moment, but when things go haywire, they go haywire fast. Coins on exchange, this is just the chart from last time. This is the chart from a few days ago. So we're seeing those coins really come off the exchange very quickly. And every single coins coming on exchange is kind of being used as an opportunity to get people to sell their coins and continue down. From fear and greed, this was the chart last time. We're actually seeing right here, we're seeing now a trend of bottoms being put with us coming right into this anxiety level. So that to me is why I started to look at trying to get long on Bitcoin price resumption upward. This is from last time, the R hodl wave. And what I'm seeing right now is you can kind of see this leveling before you really start to take off. And R hodl waves that tell me that it looks like we're about to be going into this next repricing event, right? Because when Bitcoin price moves, it doesn't really just move a little bit, right? We don't just get 25% gains, we get 100% gains, 200% gains. And then, you know, it's usually closer to 400 or 500% gains. So we'll see how this next leg goes. The hash rate from last time and now looks perfectly healthy. Exactly what we want to see in a bull market. This is the ETH BTC chart from a few days ago. And I don't know how you kind of felt about the ETH BTC chart. I feel like it might be starting to roll. I'm not really sure. I don't look at it as much as obviously you and Alan do. Alan seemed to remain pretty bullish, but I would just say that I am cautious about ETH BTC at the moment, just because ETH has been so bullish for the last, 2 or 3 months in terms of news cycle and a lot of FUD around these other smart contract competitors. BTCD, this was kind of what I was looking at last time. That was now we know too extreme, but right now it looks like we might hit the bottom of this wedge and kind of get our bounce from there. This is the gold chart, and we've actually started to resume down / consolidate. So we'll see how this breaks, just because we've both talked about the opportunity of being able to sell a Bitcoin top into a gold bottom and ride that out through a bear market, which would be very nice. And then this is a new chart that I've put on here, Brandon. This is the Litecoin Ethereum chart. And I just put it on here because it is, to me, not looking that great. And while Litecoin might have an opportunity, I would actually personally, I am planning on waiting on a trade for resumption off of this curve trend line here. So that's kind of what I have from a chart standpoint. I really would love to hear what you think about this chart here, this ETH or this Litecoin ETH chart. Brandon went AFK. All right, well, I am going to look at the comments section then. That's not it. That's too funny. Hey, man.
How's it going? All right, sorry, I had to get up for a second. So does that? What are you checking comments?
I was just checking the comments now. But basically, I ended off with this Litecoin ETH chart here. So this to me does not look super great, and I was just wondering, like I think that Litecoin has one more kind of fake out in it before we do get that big move that you're looking for. I think we'll kind of pop up above this. We'll get a little bounce down. But I don't know if you've looked at ETH or Litecoin ETH, but the chart doesn't look too great in my opinion.
Well, Litecoin's trash. Everybody understand this. Litecoin's trash, but there are, like, when you look at a bunch of things, you look at a bunch of technicals, and Litecoin likes to follow Bitcoin. So in order for us to get a healthy resumption to the market, Bitcoin needs to lead the way. And what will happen is Litecoin will lag and then ultimately be one of the few altcoins, because it's so ancillary to Bitcoin, it'll be one of the few altcoins that outperforms the rest. And when you get to the, we all know the barometer for like when Bitcoin's about to roll over is Litecoin. So I'll continue to maintain some small Litecoin trades as a hedge against Bitcoin rolling, further. But if Bitcoin blasts out of here, Litecoin's simply just going to track it more or less. And it's coming into long-term support versus Bitcoin. Yeah, the Litecoin versus Ethereum doesn't look good, and it should continue to decline. And this is not like I've said a million times that I think Litecoin's trash, and it's eventually just going to go by the wayside. But it has some key elements. One, it's one of the very few fair launch coins left. Like, these pre-mined coins, if they get any SEC regulation or whatever might drive people back into Bitcoin, Litecoin's one of the few. And Litecoin, while it has a known founder, the known founder is out, right? Charlie sold everything. So it's kind of like it's in the Bitcoin camp of one of the few coins that it's truly decentralized. There's nobody that has any sort of control over it, right? So that's the one thing about Litecoin is it's the well-known little brother to Bitcoin that has no founder, and it also is very illiquid. If you look at all the metrics around it, it's highly illiquid, and whenever it wants to move, it moves huge. So it's worth maintaining a few trades on it as Bitcoin strengthens on the back of Bitcoin strength. I'll be as specifically if Bitcoin were to break out in total, I'll be very, very light with any Litecoin trades and very heavy with Bitcoin trades. But I'll rotate to Litecoin trades as Bitcoin starts to slow its momentum. If we get some sort of like triple, 3 drives topping pattern, as I'm exiting Bitcoin, I'll be ramping up my Litecoin trades, because very likely on that, whatever the last move up before it completely rolls over, Litecoin's probably going to make a big move. But we'll follow the technicals too, if the technicals continue their setup. But I mean, yeah, at some point, Litecoin is probably going to make a really big move. It's highly liquid. It's very liquid. It's very highly traded, but there's not a lot of, just like Bitcoin, there's not a lot of available supply per its daily trading volume.
Yeah, and then I would say it does maintain a lot of that mania infrastructure, as I like to call it, right? It's available on Venmo, PayPal, kind of a lot of these more retail areas that can, if you get a big Bitcoin move and Bitcoin bear market does begin, but people think that we're in, a once in a lifetime crypto opportunity, you could get a lot of people kind of FOMOing and not really understanding what they're buying with Litecoin. And that drives the price up. So yeah, that's kind of what I got for today. We went sideways. I think last time I was here, I said I wouldn't be surprised to see Bitcoin kind of go sideways in the 48 to 51K level. So we'll see how the next couple weeks and months go. I think this is a great, I am playing this like a great buying opportunity. I see a lot of fear. I actually bought some calls on Bitcoin for that March expiration, March 25th, since that's right in between March 7th and April 7th, which is where I think we will be peaking and topping out. So I'm excited to see what comes next. I'm expecting higher prices.
Yeah, exchanges that only have like 4 to 5 coins often do have LTC. We got Luna. I'm reading the comments here. So, but as you guys know, sorry, I've got a lot of noise. I had somebody show up that I wasn't expecting to show up. They're making a lot of noise, background noise for me today. Okay, but yeah. So reading the comments here, central bank catalyst. We look back on this halving in the future. Is the central bank the catalyst? We look back on the halving in the future. Well, HYA 5011. I'm if I recall, it's actually Lemmy's like YouTube name, but I'm not sure. In my opinion, like it doesn't. All assets should appreciate in dollar denominated terms because of the devaluing of the dollar. So, I'm looking for relative buying power. Like that's what I'm looking for. I'm looking to maintain my buying power or to grow my buying power, right? It doesn't matter to me what it's denominated in. And I think,
Right.
people have been conditioned to think in dollars. I don't think in dollars. I think in terms of what will my current basket of assets acquire? What's the purchasing power of whatever I happen to own? Whether it be land, Bitcoin, gold, houses, whatever, equities. So in terms of like absolute buying power, the Fed really has nothing to do with Bitcoin, honestly, other than the fact that somebody can monkey with a denominator is the selling point for Bitcoin. Like, nobody can mess with the denominator if you're denominated in Bitcoin, right? It's a fixed denominator. But if you're denominated in US dollars, there's somebody always constantly tinkering with your denominator, which makes really good price signaling extremely difficult. So
yeah,
very long-winded way of saying I don't think it really matters what the Fed does, honestly, except for the fact that the fact that the governments and the Fed keep monkeying with the dollar in order for short-term, whatever their short-term objectives are, is the ultimate catalyst for Bitcoin to exist. Period.
Right.
So,
yeah.
Go ahead, Michael.
They're when you can't care about the dollar other than the fact that it is the most used unit of currency in the world today, right? So when you have, 8 to 12 people going into a room and deciding what the future value in terms of purchasing power is going to be, and their goal seems to be that they want it to be as little as possible, but they don't want people to stop holding the currency. So as little as possible, as long as people will hold it. That's not really a recipe for long-term success for the people actually invested in that asset.
Exactly. So yeah, whether it will be the catalyst, I think the catalyst for Bitcoin is adoption, right? It's just continued adoption, and what the halving does, and so it's the demand side that really drives the price. The halving, all it does is it creates a supply shortage situation as demand is constantly ramping. It's an exponential growth asset. Demand is constantly ramping up. So when you take a almost exponentially increasing adoption asset and you cut its supply in half every few years, if the market doesn't understand that enough and forward price it in properly, it's got to get priced in after it happens. And that's what happens. That's what's been happening. And that is still happening. The one big outlier this whole cycle is China, one of the biggest buyers of Bitcoin, leaving the market. So that's what's created this weird extended dynamic to this whole cycle, is that we had a bunch of supply come on exchange, or come on not exchange, but a bunch of supply come back into the market as all these we had a bunch of buyers dry up, right? China was one of the biggest buyers of Bitcoin, and then on top of it, they had to dump all their supply onto the market, and it had to be absorbed by the market. So that what that does though is that creates this pent up situation where when that selling dries up, all the buying that is the consistent buying is created in other parts of the world that are consistently buying up the supply that they keep putting onto the market. If you think about that, China is by now nearly fully exited the market. So when they started exiting the market, the price of Bitcoin was in the 50s and 60s, right? So that's when China announced they were going to ban mining, and it's been this crackdown ever since then. We're still at that same basic price level. Actually, yeah, right below that price level. That means that in this year, the market has absorbed the entirety of the biggest buyer of Bitcoin, both leaving the demand drying up that, but also adding that supply. And so now you've got multiple drivers that as soon as that supply that keeps getting dumped on the market, that sell pressure and the vacating of those buyers, all those things leave the market, right? So the vacating of the buyers, that happened. That's what created the summer sell-off, right? And then the supply dump. And then now, as soon as that selling pressure finally abates and they quit selling, and the last of the those that have connections in China, and I don't know if it's it's not the Chinese government per se, but there's a lot of people in China, right? And a lot of them maybe couldn't get access. Maybe they, whatever, they're in China for all the lockdowns, and they're maybe international business travelers, and they've been waiting to travel internationally to access their accounts and to sell their Bitcoin, right? Who knows why the lag, but there's going to be a lag. It's going to take a long time for all those people that were holding Bitcoin to be able to either get access to their coins to sell them, or they're waiting for a good time when they felt that they wouldn't be, compromised. Who knows? But when that sell pressure finally dries up, we've got quite the supply situation here that as long as the buyers that have been buying, and there's lots of them that continue to buy, as long as those people continue to buy, and the selling pressure is gone, then price, in theory, is going to go up. And then the catalyst for price going up is when price really starts to go up and we hit some bigger numbers, then buying becomes frenzied. And then you have this potential blow off top situation. The other reason I'm more in line with the blow off top camp now than before was having seen the selling pressure from China dry up. I mean, it's kind of obvious that a lot of the Wyckoff patterns are actually driven by people in that part of the world. I don't know if don't ask me if it was the Chinese government or what. I have no clue. I doubt it was the Chinese government. But somebody over there that had a very large interest in Bitcoin that then understood that they had to exit the market because China was going to be banning Bitcoin. If they're that heavily loaded with Bitcoin, they're probably pretty well connected. They probably knew it was coming. So they might have driven a lot of that Wyckoff topping pattern in the spring so they could exit a lot of their position before the announcements were made when they were coming. And then they drove that bottoming pattern that we saw as a way to help them. I don't know what else they were trying to do, but this is these last couple of topping patterns we've had, rolling tops, were probably them exiting the market. And you can see it on Hobei, like just an absolute exodus of Bitcoin holders on that exchange. And that's the primary exchange for China. So that's a good proxy for understanding what's going on in China. Anyway, go ahead.
Yeah, and I mean, if they had a lot of Bitcoin in Chinese markets, I mean, that doesn't mean like you have to potentially come up with a way to be able to exit the market, right? Because all we did is we kind of saw all of those coins get sold off and then they were rebought up, right? Like we have almost a net change of zero, right? So if you're just trying to move outside of the Chinese market, you would have a rolling top and a rolling bottom. That makes a lot of sense. But I do think that a lot of capital did exit and kind of is going into other markets. Like we know that gold markets are suppressed, for example, and we've seen a lot of Chinese and Russian and Polish buying of gold. I think they're at all-time highs from the last 6 years or something like that. So we're also kind of building a base in other markets that if we do get that blow off top in Bitcoin in the spring, we kind of have a nice ability to have a higher confidence in that gold market, which I've been pretty bearish on for over a year now. I also do want to address real quick. I see Quiz Dizzle. Hopefully I said that right. Just said that like I have a tinfoil hat for believing that the central planners and the central banks are kind of working together with a monetary agenda. And I just kind of want to say that, like, you know, previous central bankers have come out and said that their actions were driven by previous administrations. So I don't see any reason why that would be different now. You have Janet Yellen, a former central bank head, now heading up the Treasury. And since the Trump administration, where he came out and said, I want the Treasury and the Federal Reserve to be working together to stabilize monetary policy and markets and whatever. You know, I don't think it's a tinfoil hat thing to say. And I just wanted to kind of explain why that was, because we're here to learn and understand markets.
Well, good. Let's see. Let me look at. Yeah, I think it's kind of obvious to me that they work together, but you know, it's yeah, that's my take on it. It's kind of fairly obvious. Okay. Rest is amazing though. The on-chain stuff. Moving forward, he did give you some props. I think he's thinking that the central planners, and so anyway, there are different people that have different criticisms. Moving forward, we have less impact on prices from the actual halving event. We need external macro events. So yeah, the halving's by now priced in for sure, right? But what we continue to see is that supply, you know, illiquid supply continues to decline, which means that to a degree, you know, the maybe the halving isn't fully priced in just yet, but it likely is mostly priced in. But when you look at what the drivers are now, again, that huge influx of supply onto the market, they got dumped on the market and they got reabsorbed by the market. And to Michael's point, yeah, there's some evidence to suggest that holders were simply moving. They were moving.
Yeah.
Basically.
But that you have to show China that you've actually, like, the whole point, you can't continue to be in China or be in the government's good graces unless you show them. They were like, we want you to get rid of your coins, right? So they just did the same thing that they do with like other stores of value. They just sold it in China and they took it offshore, right? They do that with real estate. They do that with their gold. They don't hold their gold in China. For their very big players, they hold large portions of their wealth outside of the Chinese system because they know that the government can come in and just take it whenever they want. So it looks like that's what we saw. We saw large expansions of Coinbase buying and Binance buying, and we saw large selling from Hubei.
So yeah, so there's some that you know, and if they're going to do that, right, if you have that many coins and you're going to have to move location like that, why not also engineer, you know, and sell into high prices and buy back in low prices while you're moving and add more coins to your stack while you're doing that. So yeah, that's a very likely possibility. But the Bitcoin is underpriced, and I think the biggest thing, just it's kind of clear to me that right now the price that Bitcoin is not reflective of the true value of the asset on the market. That's just clear as day to me, right? And so in the short term, you know, yeah, we could get another sell off to the low 40s or even the high 30s or something. The high 30s would be problematic because of just it would be a little bit more bearish on the technicals. But as of right now, anything above 40,000, a sell off to anything above 40,000 on the short term would be a lot of noise. It'd create a lot of pain and anxiety and stuff. But I mean, I've got stop losses for a reason. But outside of that, just it's so macro bullish. I just, from a very large macro perspective, Bitcoin probably should be trading in the 80s from what I can see. Like that's where it should be. So when you have something that's trading well below its value for this long, when it finally gets to its value, it overshoots its value, right? And then it comes back down below it, So, it depends on how you value kind of the fair market price. But I think basically, if I were to illustrate it this way, we had that really strong price action from late last year to early then. So we clearly got way over, probably overheated at $64,000. But the general trend has been upward. So literally, if you draw a trend line from October's price to that July low, or another one from the early 12,000 peak we put into the top, and you just find the median price somewhere in there, it's probably more realistically what the market is kind of should be valuing the asset at, which is at this point in time is up here in the 70s or 80s. So we'll just see what the market has to say. But the other thing too, things change quickly. And so I don't know, this year, what's crazy to me when you look at it, since we hit $65,000, we've had so many also macro bullish things happen to the asset. There's been so we haven't had the Apple, the Google, the Facebook buy, which is what I think a lot of people were thinking was going to be the big catalyst, right? Somebody huge like that gets involved in Bitcoin in a big way. That hasn't happened. Fair enough. I've seen insurance companies adding Bitcoin to their balance sheet. I didn't expect that to happen this cycle.
Yeah.
That was not, and we have obviously El Salvador and about a dozen other countries that are taking Bitcoin adoption very seriously. Now El Salvador is like the extreme exception with the CEO / president of Bitcoin. I mean of El Salvador on Twitter talking about buying the dip and everything. It's kind of crazy, but but that's none of us. I never thought that we'd see countries actually officially adopting Bitcoin and buying it, putting it on their balance sheet. And there's not just one, there's several. So those type of like very, very macro bullish, developments were not a part of my kind of macro thesis. And that means, so again, Bitcoin continues its adoption. And I still feel like, so you asked a question about the Ethereum Litecoin chart, the Ethereum Bitcoin chart earlier, and I didn't get a chance to answer that. Yes, it is my opinion that this is a fake out to the upside. Let me share my screen real fast.
Yeah,
I think
it looks that way, and like I don't think that means that it's because Ethereum's about to roll over, crash, and die. I just think that, right, you're talking about the difference of a decentralized platform to do computing things, right? Like at its widest spectrum of need, right? And I think if you take a step back and you look at what the most important problem that needs to be solved right now, we don't need a computing platform, right? We have lots of computing platforms. We have lots of options. But what we do need is a decentralized peg for value, because we don't have that, and we have nation states saying, hey, these pegs of value are not going to be as good, just period, right? Like inflation is here, we're not calling it transitory. I think a lot of people took that the wrong way, where they thought that meant we need to fix monetary policy, but it really, if you look at what they're doing, they're just normalizing the idea of inflation. It's just here, it's just a part of the way things are. And 6% is what they kind of want to be showing on that CPI. I mean, they were comfortable with it even going up another percent. So yeah. Sorry.
Yeah, no problem. So yeah, on my charts, let me pull this out. So first of all, Bitcoin needs to break. If Bitcoin breaks 48,885 in any time in the immediate future, because that's where my top trend line kind of comes in, it could be some exciting price action here. I keep glancing at my chart, looking to see if we get a break of that before we wrap up. But on your ETH Bitcoin chart, so exactly, I think you and I, we're both technology people, right? So you're more on the cloud computing side. I'm more on the core infrastructure side, but very, very synonymous. I think we see a lot of this stuff in the same light. People that don't work in technology, maybe they hear the buzz and stuff, and they think something else other than what the reality is. What the reality is, Ethereum is super simple, y'all. I mean, it's like I know people think this is some kind of crazy like if you look at the code for Ethereum, it is like stupid simple. It's an accounting ledger that gets cryptographically linked to another accounting ledger. And then on top of it is this little lightweight piece of software that's called a virtual machine. It's just an execution engine that runs some code every once in a while. It compiles some code on some rules, and it has this thing called gas that prevents it from looping. But it just compiles some code and then it writes balances to this little ledger that's cryptographically signed. Like the entire code of the core of Ethereum is super simple. And the whole like world computer and everything else sounds cute, but it's not like it's an actual world computer. It is a horrible, inefficient, having every computer do the same thing around the world. So all it is it's a way to very inefficiently cause every computer to have to process the exact same thing all the time, right? So it's not like it's this super like, but what's the amazing part of it is, it's the idea, it's the invention that it brings, it's then what you can build with it. So with Bitcoin was the discovery of absolute scarcity of money and the ability for no central one person. So it's a permissionless system that is truly decentralized. No one person has the ability to decide that we're going to print $3 trillion or 30 Bitcoin to pay for something or whatever, right? So nobody can mess with that. So it's the invention of absolute scarcity of money, which is we've never had that before, right? If as who am I parodying here? Not Robert, Robert Breedlove, I guess. He's the one that talks about this, right? If gold became super valuable, right? So if the price of gold shot up to $10,000 tomorrow, and it made sense for a whole bunch of people to start mining gold, the supply of gold would drastically increase. People would find gold in every drawer they had in their house, whatever gold ring they have, they'd be melting it down, selling it, whatever. And miners would be mining it like crazy, right? Supply is going to go up. The price of Bitcoin goes from 48,800 right now to $480,000 tomorrow. Nobody can produce another Bitcoin. There is no increase in supply. That's because the price went up a lot. So that's absolute scarcity of money. Well, what Ethereum represents is the invention of being able to do full computational processing in relation to a decentralized permissionless ledger. Now, at first, of course, Ethereum wasn't a hard asset like Bitcoin with a known supply and a fixed cap, right? It is now becoming deflationary in theory, but still is no hard cap on it, right? So it's not like it doesn't check all the same check boxes that Bitcoin does with the absolute scarcity and the invention. The Bitcoin represents that invention. Ethereum represents an additional invention, the discovery of being able to have a permissionless and decentralized computing ability to do some basic computing and then store that in a decentralized ledger. So it has plenty of merit on its own. It's got plenty of value. I'm not saying, I was a big holder for a long time. I still have some. I want to buy more. And the reason I haven't bought more though is because of the exact reasons Michael just talked about. When you look at the macro picture, which one is more valuable? Well, Bitcoin is probably thousands of times the invention that Bitcoin represents and the discovery of absolute monetary scarcity is probably thousands of times more valuable than the invention that Ethereum represents, and that ability to do this very inefficient but decentralized permissionless compute, writing that to a decentralized ledger, right? They both represent some sort of major breakthrough invention, but not our discovery. But Bitcoin's is hundreds, if not thousands of times more impactful than that of Ethereum's. So the only way that this whole flippening thing happens is if Ethereum is provably deflationary. We get real good numbers around the asset value, like how many hard tokens that they're going to be, and it becomes actually deflationary, and it takes over as that pristine measure of account. I don't see that happening because Ethereum doesn't have a hard cap, and there's not a known supply. We can get pretty close, but there's not a for sure known supply. And thirdly, we don't know if it's actually ever going to be deflationary. Currently, it's inflationary. They're working on proof of stake. It should be. I think it's probably going to be. But there's a lot of headwinds. There's a lot of work it has to do to get there, and it's going through so many changes. Bitcoin is done. Like with Taproot now, the only thing left really to do on Bitcoin is there's a whole ecosystem building around it on top of it. There's all the layer 2 and whatever else that needs to be built on top of it. But as a pristine ledger-based asset, the only thing left is if quantum computers really do crack RSA encryption and break the whole internet. Well, first of all, the whole internet's gonna have to, we're gonna have to update all of our encryption algorithms and cryptography for everything that runs the internet to quantum-resistant cryptography, and Bitcoin will just be the same. It'll be a small update to the code, and with Taproots, everything's in place. We can very quickly flip to a quantum-resistant encryption scheme, right? So it's not a big deal to make that change. It's really not. So if quantum computers ever start, whatever, people are freaking out about what's going to be.
Yeah, and it doesn't change the ledger, right? Like the ledger is still there. It is still set. And it is, yeah, I mean, like the network would have to be reset. It would make it, it would set Bitcoin back in terms of, being a long-term store of value. But it wouldn't stop it. It would set it back in terms of how long it would take for that adoption and that confidence to kind of take hold. And there would be future efforts that focused more on the long-term security and potential problems that could be caused to the Bitcoin network. If there are quantum computers, it is very unlikely that they will be used to go after Bitcoin. There are far more valuable targets to go after than Bitcoin at this time.
Nuclear launch codes. If you got, so the moment they get a working quantum computer, they can crack any sort of military codes that are saved in encryption that are publicly accessible, and there are a lot of them. They can take over, maybe not necessarily nuclear. I think nuclear codes have some hard security around them that I don't know that you could actually get full access to them via just encryption. But there's all kinds of very, very big assets and very big things that if you had control of an entire government, right? If you could put the security, the military security of China, Russia, or the U.S. at stake, well, that's a much bigger deal. That's, if you controlled that, that's trillions and trillions and trillions of dollars worth of value that somebody's going to have to pay you to get out of that quandary that they're in. That's a lot more than Bitcoin's value, to your point. And yeah, so we would see if a quantum computer ever lit up that it was actually working that could break RSA encryption, you're going to see that. You're not going to hear about it. We're not going to hear about it for a long time, but there's going to be all kinds of stuff, probably starting with conspiracy theorists about who's got access to what. And it's going to be things that have nothing to do with Bitcoin. And the Bitcoin community is going to have a long time to figure out they need to move to quantum distant cryptography for that cannon aimed that direction.
And to kind of just, circle back, if we could go to the ETH BTC chart real quick, and just zoom out, right? Like we've had this little upside breakout, and I think you'd really like if you were planning on taking if I were planning on taking an ETH BTC trade, I'd want to see it get above that level and hold that level. I think the chart, when I see a chart that looks like, I mean, the only difference between this chart and the Bitcoin chart that rolled over is that second peak was higher, right? Like you can see markup, right? Two peaks. Here's our, like if that second peak was higher than the first peak, that's the only difference I see to a rolling top that's happening right now. And I don't think that means that Ethereum won't retain value. I just think that a lot of people are looking at the price of Bitcoin, the value of Bitcoin, the price of Ethereum, the value of Ethereum, and folks that really understand the current problems at hand, right? Because I mean, if Bitcoin's price runs up, you're going to get a government response, and they're going to try and figure out a way to kind of either shore up their own currency or kind of come after Bitcoin for another FUD attack or regulatory attack or whatever, right? I mean, that's kind of how Bitcoin works. It marks up its value versus real assets increases enough that you kind of get a government response. And then people come to terms with that new price floor and you keep going because the system here is built around election cycles, not around decades long planning, right? So I do think that ETH will have a chance to shine. I just think that right now, from a risk reward standpoint, Bitcoin looks far more attractive in terms of both fundamentals, addressable market, and the actual price that it's at the moment. And I think people are kind of sleeping on that.
I had a question here, and I think we should probably get to wrapping pretty soon. Thank you again for your time,
Sure.
Michael. I'm gonna answer this one question here. So when we say LTC is garbage, besides from a technical perspective, the fundamental outlook for Litecoin is not there? Question mark. All right, so Litecoin as a protocol is fine. It's a simple protocol. I mean, obviously it's a fork of Bitcoin with some modifications to make it a little bit more lightweight. That's the name, Litecoin. From a trading perspective, again, it's available lots of places, so it's got a pretty high trading volume per day for a smaller asset. But when I say it's garbage, I don't mean it's actually garbage, right? It's fine. It's actually usable. There's a lot of real world use cases for it. People do use it. What I mean is, when you look at the grand landscape compared to Bitcoin, like there's just no place for it, right? So at one point, what Charlie Lee had in mind when he invented it was, Bitcoin was going to be this kind of pristine, slow-moving store of value, and he was going to develop Litecoin to be a lightweight alternative, parallel alternative, and that's more used for lightweight payments and small transactions and things like that, right? Well, obviously, since the development of the Lightning Network, which is a pseudo-centralized layer 2, I'll give you that. So it's not like it's a totally decentralized layer 2, but it is. It's not centralized. It's not even as centralized as Ethereum is, the Lightning Network, by the way. But Litecoin, trades well, but it doesn't have. There's no use. I can't think of any real use case anymore with the Lightning Network for Litecoin. And there was a case before the Lightning Network was as built out as it is now. There was a case for it, but now that the Lightning Network is so built out, with Strike just on top of developing it all the time, and you've got countries that are using it. El Salvador is using it, right? There's just I don't see a reason to exchange in Litecoin, right? When people's value perception of Bitcoin, when people understand Bitcoin, now people are going to start valuing Bitcoin as Satoshis, and Satoshis are small enough and lightweight enough that when people start valuing, like, okay, a Satoshi is worth this much, fraction of a penny or whatever, and at some point, 1,000 Satoshis might mean something, right? I can buy a hamburger with 1,000 Satoshis or whatever, right? When that point comes, I just don't see where Litecoin fits in this world, right? It's a very Bitcoin centric for people that are using Bitcoin. Maybe not the whole world uses Bitcoin. Maybe a lot of the world uses US dollars still, but for people that are using Bitcoin and thinking about Bitcoin, they're going to think of it in Satoshis, and the whole, the value of Litecoin, it doesn't have a use case outside of, that's compelling because of Bitcoin's Lightning Network. And secondly, it's just, it's a small enough account. People want to buy it because I can have X amount of coins. So when people start thinking in terms of Satoshis, that's all going to disappear anyway too. Like the whole unit bias, right? This is a big thing right now. That's why nobody wants to buy Bitcoin, because it's $48,800. Oh, it sounds too expensive. But when you think of it in terms of Satoshis, I don't even know what a Satoshi is right now. It could be pennies.
0.00048 cents, I think.
Yeah, so I can buy several thousand Satoshis for $100, right? When people start thinking in that terms, when they start understanding that Bitcoin is there's a unit of count that's much smaller, and there's a lot of movement within the community to switch to, because of the unit bias thing, to switch to measuring things in Satoshis. When the next big move happens, I bet when that mind shift happens, it's going to make a big change in price. Look at, this is what gives Bitcoin the ability to move quickly from like a Shiba Inu or Doge type of thing, where it's like, oh, I can buy 1,000 Satoshis for a couple $100, sure, right? I don't know, but I just don't see a world where Litecoin is useful long term. It works very well as a trading asset. You can see how well it trades. I mean, just look at this chart. We've been I try not to this has been such an easy trade all year. It's insane, right? Like, this thing just loves to sell off, find a bottom and pop. Loves to sell off, find a bottom and pop. Just like, people who are giving me grief about trading this asset, I'm like, well, I've been killing this trades on this thing all year long. It's super stinking predictable, right? And until it's not this predictable, then I'll quit trading it. But you just see this pattern. and then we lose this trend line here, and then it sells off. All right, this is what stop losses are for, right? You have stop losses below these levels, so that something bad should happen. You wait it out and you buy again. But you break these downtrend levels, and then it just loves to pop, and then it finds a bottom, breaks a downtrend level, and loves to make a big move. And it's going to keep doing that, guys. All right.
Yeah. And just on the Bitcoin thing, right? Like Bitcoin has gone out and solved the hard problems first that a lot of these other coins would have to figure out how to solve, especially around decentralization. And a lot of the problems, like you talked about the Ethereum code not really having all that much in it, right? Like the problems that Bitcoin has to solve on layers on top of it with that really strong foundation and that really strong monetary policy, right? Like Ethereum needs to have a 10-year consistent monetary policy to give people confidence that it's going to have that same monetary policy tomorrow. People, I think, are sleeping on how much more Bitcoin can do and be used for, and how a lot of these small coins have the challenge of, as the ecosystem matures, I mean, like a lot of banking infrastructure needs a sound, stable, strong monetary policy. And a lot of these smaller coins are going to have to compete with the fact that Bitcoin has that. And as a lot of these blockchain problems get solved on other protocols, they're then going to have to compete with Bitcoin still to convince those companies and that infrastructure not to move over to Bitcoin in a long-term standpoint as it starts to become real and start actually getting used. Like, why would I want to sit on the Ethereum layer when they can push out a hard fork that benefits asset holders at the expense of platform builders and network users, right? With the IP 50, whatever that raised the gas fee, right?
1559, which
right. Like why as a institution do I want to go and build onto one of these smaller protocols where that can happen to me? Whereas if I go on Bitcoin, I know what the rules are. I understand how to optimize my business on that rule set. Like I mean, when Ethereum put that change in place, they crushed Uniswap like almost overnight because Uniswap, I think, if I understand Uniswap correct, it uses the layer one more than some of these other layer ones like Polygon and Matic do, right? So you saw overnight, because of the Ethereum change, you saw Uniswap kind of get crushed, and you saw Matic and Polygon really benefit. And that's tough as a business, right? If you're trying to run a business, that's a tough thing to deal
with. Polygon and Matic are the same thing. They rebranded Polygon.
Okay.
But so it is a layer 2 solution. So Loopring and Polygon / Matic are layer 2 solutions in and of themselves. And so with Polygon or Matic, you can build, that's a full sidechain solution today. So you can build layer 2 exchanges on top of Matic. So Matic is its own platform, basically, that it's a layer 2, it connects into, ultimate settlement happens on the Ethereum layer 1, but you can do a bunch of smaller transactions on the side chain that eventually gets settled on the main chain. Loopring is this ZK zero knowledge is like everybody, like I've seen a bunch of stuff about ZK. People all said about ZK projects lately, like this is some kind of brand new thing. Zero knowledge proofs has been around since about 2000 BC. This is like not anything new. Like I don't know why people think this is new, and it's been around in technology since the 40s, like actually used in electronics since the 40s. So this is not anything new. Just zero knowledge proofs are just it's a way of cryptographically proving one way that you did something, right? Or that you either know something or that you did something. It's a way of cryptographically proving that one way to where everybody else can know that you know something without knowing what that is, basically, or the details of it, right? So this has been around, like I said, for eon. It's not a big deal. But Loopring is a ZK-based roll-up platform. So it's its own exchange. It's an exchange and a layer 2 scaling solution, but it's really it's an exchange. It's a layer 2 scaling solution built specifically for its exchange. And it's all using zero knowledge proof. So what it does is it signs all these, whenever you move something, it rolls up a zero knowledge proof, rolls up a bunch of those, pushes a bunch of those in a little package to the layer one chain, and all those get finalized. But you can move coins around. These zero knowledge proofs are fungible. You can keep moving them around, and eventually they're going to get settled on the layer one chain, but you can continue to make use of these things. Anyway, there's some differences, nuances about how they work, but Uniswap is its own decentralized exchange, but it has no chain of its own. It connects into other things. So it does connect into layer twos now, right? So they have their own optimizations. They have their own liquidity optimization engines and all kinds of stuff going on over there. But ultimately, transactions need to be settled somewhere. And like right now, they're predominantly settled on Ethereum's layer one based chain. Over time, they're inevitably going to move settlement to layer twos of some type, right? The main thing with the decentralized exchange is that you just need the ability to settle and have assurances on a trusted blockchain that something happened, right? And so that's what all these solutions are doing. But yeah, so the scaling solutions will do better when the fees and everything become more and more of an issue as layer one becomes more and more congested. So that's kind of what's going on there. But all right. Tweeted that out. Yeah, I do think, in my opinion, this is looking like an extended September type of sell-off more than a July. But we'll see. This could be a fake out. Like this, right where we're at right now, could even be. I mean, we don't know what's going to happen until it breaks one way or the other. But I'm watching closely. It looks like this outer trend line right here. Notice this. This is the outer trend line that we were watching in the summer sell-off way the heck over here, right? We are much closer to that because of how compact all this selling was and how compact this price action is. That looks a lot more compact, looks a lot more synonymous to this, right? So like what I'm seeing is we are probably, closer to here than we are. Like, this was a long way off when we're down here. So this is how compact these two have been. Much more compact sell-offs. This was more of an extended, slow death. Right.
And we should see those selling pressures kind of get more and more compact as we kind of head higher. I mean, very rarely do you get a 30%. I think we're 30% down right now. Very rarely are you 30% down from the highs and people are this bearish. It's not, you don't get these opportunities in Bitcoin very often. So, and I think that on the benefit of
30% off the highs. Wow, you're right. That's crazy how bearish people are.
That's not the market sentiment, right? So you don't get that very often. I mean, we didn't even get this in the summer. It was bearish. People were talking about 20K, right? But it was 20K in recovery. Now the conversation is, you don't even really get specifics from people who are bearish. They don't know where the price is going. It's just like, yeah, just lower. They're just like lower. And you're like, how low? How much lower could price go? So yeah, and I think I like how you draw that all the way out to October, but like, I think we're about to see very sharp price rise. And people, especially since we had that sell-off, right? It made a marginally higher high and then sold off, right? I think people now, like, I see this as we break out of this downward trend that we've had. I see this as the, this is the easy part from trading, at least for me, how I feel about it, right? Like, this is where I feel most comfortable going in and taking a leverage long, which I don't really love to leverage unless the probabilities are very in my favor in terms of upside and downside. Like, you're going to get people all the way from 49K to 69K saying price needs to cool off. We need a retracement. We're in a consolidation, all of this stuff, right? And there's really that I don't see, right? If you had people that were buying in all these areas, right? Like, where's the selling going to come from? I don't understand where the selling's going to come from when they're waiting for, much higher prices coming into, next year. Especially, I think once we hit the 80 range, you're going to get people with the 22 only up and, mini bear markets kind of kind of vibes. And when people feel like their risk to the downside is low, they're more willing to take higher amounts of risk to the upside, even if it's not true. Yeah, I mean, I don't think we're going to get this rolling top. I think if we do get rolling, we'll get rolling and then a final move up, not final move down. I think we'll get just off that rolling, we'll get up. But yeah, I don't know. We'll see. I just feel like it's going much higher.
Somebody just asked, they like to hear my comments about where I think it goes next. Assuming we finally get this breakout and all this liquid supply starts to really take effect, right? And when the selling ends from China, basically, this is like the best case scenario that I can see in the short term. This is way too far out though. Michael's got some price targets that are further in, but you get the idea.
Well, you're not on a log chart, right? Like if you were on a log chart, it'd be easier to kind of see.
Maybe, yeah. So, what I see happening is a strong price increase up, battling its way through these pretty fast. Like if you look at this September spike right here, that went through, sliced through all those resistances I kept talking about, like it was hot, like that's just nothing, like a hot knife through butter. But you'll get this little bit of a wiggle right here as we break the all-time high. You're going to get obviously some resistance coming into that, but what's going to happen is everybody and their dog is now looking for this pattern of breaking the all-time high and then selling off, right? So everybody's going to be trying to position themselves and taking shorts, and then when it rips the other direction, it's going to leave so many people like just dumbfounded, right? So I think this is probably what's going to happen, and then we get a big leg up. So what I think probably, if you look over here, what I think is going to happen is something that looks like this. Right, so we've had all this shenanigans. So you can consider all the stuff that's happened all year long, similar to the shenanigans that happened all through here, right? This little bump up and down, and finally we get back to some resistance level, and then instead of rolling over, we just blast through. So that's kind of what I would expect for the next leg up. This is definitely setting up for another leg up. I'll just say that, right? So if it were to do that, I expect people to get all faked out right around the prior all-time, like $69,000. And then see it rip in their face. And then everybody's going to be selling at 100,000. 100,000 is going to be resistance for a bit. But, I would be surprised if we blast through here this fast at this point. But, I don't know. You just never know.
So,
this is my most optimistic case, right? Then this also fakes people out and we can just continue to blast through. And then the buying gets absolutely ramped like crazy through here. And then we have this kind of 3 drives rolling top. That's my most optimistic.
What you can see market makers and investors doing though, with the people who kind of, I personally think have kind of figured out how these Bitcoin cycles work, is they blast right through prior all-time highs, and they blast right through areas that should be resistance, and then they come back later and they spend a lot of time consolidating around those areas. So like I could see us potentially kind of blasting right through 100K and leaving people behind, but then coming back later in the bear market and spending a lot of time around 100K. Absolutely. Like we might spend almost an entire year and a half around 100K, because that capitulation low is really only around 70, right? So if your capitulation low is around 70, and what we've seen in the prior 2 cycles is shorter and shorter accumulation kind of happening after that bear market capitulation before you finally blast back up and go back into accumulation before the next halving. What you're going to end up seeing then is a lot of time spent around the 100K. So I don't know if we necessarily need to put a big floor under 100K for it to go higher. I know a lot of people now who are aware about 100K, but haven't actually, they're aware about Bitcoin, but they haven't actually bought yet on the retail side. And I think that price going up, unfortunately, is what, makes people feel like they have to buy.
Well, the other thing too is, again, the next leg up will be driven by money that's predominantly not retail. Any like insane blow off top will be retail just coming in droves potentially, sure. And if above $100,000, that's probably where people would switch to like a Satoshi based, like, thinking about Bitcoin as, Again, $100 is 1,000 Satoshis or whatever, right? That's how they're going to probably start to think of Bitcoin. And that will help the retail FOMO. But we're seeing consistent buying from some very big players. And as long as those big players continue to buy, it can create this very illiquid movement. But I think people also underestimate. Look at what Bitcoin does. It loves to gap like this and put in these price gaps. If I put this on a log chart, right? If you go back in time, it'll make a big breakout move and it just gaps price from the prior all-time high.
Doesn't. Yeah, Bitcoin price does not work where you go up, you build a floor, you go up, you build a floor. You gap up big time, and then you come back way later and test a lot of these floors.
There's some big gaps.
Yeah.
And so the other thing too is I do see we have everything lined up to create another gap. That's the kind of where I'm getting at is I see us building another big gap up here, right? And whether it comes back to these exact price levels for a retest at some point, I would kind of doubt it if we make a big gap. But the fundamentals are all there. The technicals are there. Like this is bullish technical. Like I know people again, we're over here talking about how extreme fear. This is an uptrend. Like just put it on the daily and go, is it going? Ask, I'll ask my 2-year-old when I'm done here just to verify for me. But I'll ask him, is it going up or down? If I go from here to here, is that up or down? My son's gonna say up, right? If he says down, I'm like, no, son, that's up. But anyway, nonetheless, you ask a 5-year-old, which direction is this going? And look, we never see that gap we put in there. It's a huge gap in price, and that's a lot of people are looking for that gap to close. But the fundamentals are way too strong. Like I could see this gap closing if the fundamentals were just horrible and we didn't have countries involved and blah 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 blah. But it's in an uptrend. You're doing trading right if you're buying into support and an uptrend. We came into massive support. Let me show you the support we came into. This is how you trade correctly. People being in extreme fear here just do not know trading. They don't understand what they're doing. Like this is the monthly price range that I've got. Actually, this is from a weekly level, but this is the monthly price range right here for the month of September. We are in a clear uptrend. This is the monthly price, the opening price of 47,000 and the closing price of 44,000. That is the range of support we just came into in an uptrend. What you do when you're trying to trade or even just investing, if you're just DCA investing, you want to buy as price comes into support in an uptrend. And a very simple way of looking at where support is a 200-day moving average. You want to buy below the 200-day moving average, and you want to trim when price gets disconnected from the 200-day moving average. It's really that simple. It's like, okay, how far disconnected am I from the 200-day moving average? I'm 170% above the 200-day moving average. I should probably sell some. That's what smart long-term whales do, right? Oh, I'm below the 200 time to buy. I'm buy or below the 200-day moving average. So like the moving average, the 200-day moving average has leveled off, but it's still in a macro uptrend. If you go even broader,
where is the 200-day moving average right now?
It's at 47,344.
Oh. Can you go on the weekly real quick just to see the 200-week moving average?
I have to go change this. I have changing that one. I don't have it set time frame.
Gotcha.
Yeah, 200-week moving average is at $18,600.
Okay. And the other part of this is we're going to start dropping some of these previous bubble numbers too, right? So even if price is going higher, that 200-week moving average may not increase as quickly as people think. That's actually one of the things I'm watching for, is that 200-week moving average to cross the prior all-time high in terms of cycle.
Yeah, the 50-week moving average is the other one a lot of people watch. That's up here at 47.9, and we're pretty well holding that level.
And then, sorry, I do have to go in a second, but if you could go back to that monthly chart. I mean, like we were talking about how we're expecting the short-term chart to kind of pop here pretty soon, right? So how does that monthly candle close? And does that look bearish or does that look bullish if you get another 3, 4, 5K on the monthly price chart before it closes at the end of December, right? Like if we're looking at that from a monthly consolidation and resumption, right? Like that to me won't look bearish. That will look very bullish.
the bottom, if the body of it is in the top half of this, then you have it's a bullish candle, right? So what that means is that the bears had control and they lost control, right? So the smaller the body, the more the indecision is. And if it's technically a red candle at a really small body, it doesn't matter if it's red or green too terribly much. What matters is the size of the wicks and the downside, and then the bounce back means that the bulls actually have momentum into the close. So this is a typical reversal candle right here.
And you do need to look for the, what do you call it? You do need to look for resumption, right? Because you have that candle here and you don't have resumption, right? But you're setting up, the point is that you're setting up for a very bullish January, February, March, right? And people are going to start putting out these charts of yearly candles, right? So if you have a super bullish yearly candle in March or April, right, where people are saying, oh, well, you used to have red candles, but now you get small green candles for bear markets, right? They're calling this a bear market from May to like now. You have small green candles, and then you have much larger green candles for bull markets. You're just going to get a sentiment and a lot of chart support that kind of legitimizes and convinces people to buy at these astronomical prices that I think we're going to be seeing here in the next couple of months. So I just wanted to kind of bring up that longer term chart and how that's kind of shaping up, because it is looking really bullish. Like, that is not a bearish chart. That is gaining and consolidating in an upward fashion, right? It's not I mean, I guess you could say it's like a really flat wedge on the top, but like that is a very bullish upward chart from what I can see.
Yeah, absolutely. Until you take out this bottom trend line over here, this is the trend line. Like, from a pure like you had some lows, you had a big move upward, you had a big capitulation downward that set your trend line. This is the main trend line. As long as you're above that, it's an uptrend. Now it depends on the time frame, right? Of course, traders trading on short time frames, yes, this is a short-term downtrend, and the right play on a very short term. Like, if you're a 1 hour trader, the right play for you is to be shorting into these resistances. But you've won a lot, right? You've won here and here and here and here and here. And now, if it goes the other direction on you, you're going to get stopped out. So you're going to have a bunch of wins and a loss if you're a low time frame trader. And that's fine, right? Everybody's got their different perspectives. But you made more than you lost on the way down. And if you're doing risk management right, this would be probably a short. I don't know, you might be a little bit hesitant to short because of this higher high, but ultimately it's probably in a downtrend. You're coming to this trend line, you're probably going to short here, and if it breaks to the upside, there's your stop loss, you're out quickly, and boom, and then short squeezes on, right? All the stops start to trigger. But on a longer time frame, on this time frame, you're doing it wrong if you're shorting and or selling, right? You're only doing it right if you're buying. See these little green boxes I have? The people doing it right are the people buying as price comes into those little green boxes. It's as simple as that. That's simple. And until, just like the short-term trader, they keep shorting the way down. When the trend changes on them, they'll hit a stop loss, and they'll have to switch directions, right? Because the trend has changed, and it's showing us signs of changing right now. So a good short-term trader, I think, would probably be cool in their jets right now, honestly, waiting for clarity. But the same thing is true with us. We're going to keep going long into support on the way up here. And then if we get stopped out, okay, great. We'll watch, maybe take another bounce here. And then ultimately we're going to get stopped out. We're going to lose our key level, and then we're have to change our tune too. But like getting all bearish and like all this insane fear readings that we've seen, if you look at this chart and you look at the greed fear, it's because people were predicting $400,000 Bitcoin this month. That's why the fear exists. Without that, with zero expectation of what this thing should be doing other than it's an asset that we're trading, nobody would be fearful, nobody would be bearish. Everybody be bullish. That's simple. But all right, Michael, thank you for your time today. It's awesome having you on. You have some great insights. I hope everybody enjoyed it. And we got some people saying they got some good comments here, but thank you all so much. Michael, any closing words before I wrap up?
It's more of a question. Maybe we'll throw it out to Twitter, but I like looking. I think it might be good from an investment standpoint if you're not just trading, right? Because it's crypto trades and tech. Maybe we should set up a call where we actually kind of look at Lightning and look at Ethereum and see they're really not that different. I know that people think for some reason that Ethereum is like way different, but they kind of look the same to me, and a lot of the same capabilities, even some on Bitcoin that don't exist on Ethereum, right? Like I don't see video, voice, and call chat apps all over Ethereum. I see a lot more DeFi and stuff like that, but like they both do their own things well, and I think just having that perspective might be good for people if they were interested in it. Obviously, if they're not, let's not do it.
Let's do it. Let's do it. Yeah, it would be good. So I talk about this with Alan all the time, and Alan and I are, he's more of an Ethereum bull. I think my guess is you wouldn't like the outcome of that conversation so much because there is a lot that Ethereum can do that Bitcoin can't do. But from what I can see, like what's been built on it. But to your point, like what is capable on Bitcoin versus what's technically capable, they're both basically dinosaur layer ones, right? They're both slow and and you need something else to help scale it up, and you need something else, and it's the settlement layer for two different things. And how you do, it's really, the conversation really is around accounting model versus UTXO, which is we can definitely follow up with that, because I can put Cardano and Bitcoin in the same category, because Cardano is the EUTXO variant of a smart contract platform. And so we can compare and contrast Bitcoin and Cardano versus Ethereum and Elrond and whoever else we want to compare it to, Avalanche or Polkadot or whatever. Solana.
And I think that some of these other chains as they exist today will end up being side chains or layer 2 chains on top of Bitcoin, right? There it goes.
Yeah.
We'll see. I mean, yeah, like a lot of times you kind of see these wicks, and then you do, like, people have been better about trying to protect themselves from getting, like some of the big players, from getting squeezed in either direction. You see a lot more defensive price action, but
Michael, you may have to drop. I may sit here and watch this, because I'm telling you guys, it's about to pop.
Yeah, that's how I mean, well, yeah, that's how I felt about it for a while. I mean, we've been overdue with all the bearish sentiment, a move to the upside. I'm actually, so my long was stopped out in profit, which is nice. And I'm still quite a ways from getting long again. And for me, I'm actually happy to get long a little bit late right now. I think that is a perfectly fine position to be in, given the current price action clearly being consolidation. And when you're talking about the difference of taking a trade at 51K and 49K, right? And you're looking at price targets where you might ride that long for months on end. Whatever, no big deal. Like, happy to take that trade a little bit later.
I'm gonna go to the 1 minute chart here. But yeah, so that was an initial. So a bunch of shorts. A bunch of people had their stops right above that wick right there. So we'll see what happens if it's gonna fake out in the short term. I think it's about to make a move here to the upside, because it's wanting to get out of this area. We'll see. When I say it's about to make a big move, I mean like the next 48 hours or something. But yeah, this breaking this right here, it's going to have a lot of people starting to manually cover when it starts to break out of this downtrend.
Yeah.
All right, guys. It was cool. fun session today. Great session. Thank you, Michael, for all your insights.
Yeah, man. These are always fun. I know that people are bearish and things are quiet, but it's usually during those quiet bearish times that people are kind of accumulating for the next leg up. So it is what it is.
Yes, sir. All right, everybody. Y'all take care. Thanks for joining us today. Let's see here if I can get my